No matter how much it hurts now, someday you will look back and realize your struggles changed your life for the better. That's an anonymous quote and a great one. And we don't ask you to struggle much. 10 to 15 minutes a day is all we ask following these stock charts. They will be worth every minute you spend learning how to do them. And we've got a great training for you today. Learn a reliable way to grow your wealth. It is about the method we use here at chartingwealth.com, why we do what we do, how to use what we teach. And again, we're not a stock calling service. We're an education firm. 10 to 15 minutes a day is all we ask. Let's jump into these charts. Everything down for the day. I never think those are healthy days. Why? Because stocks should be in one direction. I always feel like bonds and gold in another. When everything's down, it's just messy. What do we see happening? Well, haven't crossed over yet. We'll have to see what things look like on Friday as far as whether the bull trap is going to continue to be set, whether things are losing energy, going to rotate over, going down. The S&P 500 down not quite 1% today, 0.93%. And again, after that booming up day yesterday, very interesting to sort of see how all of a sudden things pulled back. Looks like it's just going to go up forever. But it didn't do it, did it? Now, we'll see what Friday tells us and what happens then. We see the price percent oscillator still negative, but heading up. Derivative oscillator still negative, but losing downward momentum. That's on the weekly chart. We go to the 2-day. It crossed over going up, back on the 2-day candle ending the 7th of April. That represented Monday the 6th and Tuesday the 7th. And then it went up for another 8 days and then sideways, then up. And what we see happening with this first day of this latest candle is a slowdown in the up movement. We haven't seen a red open box candle in a while. That's interesting. Derivative oscillator peaked back on the 2-day candle ending Friday the 17th of April and has been losing momentum. That's our leading indicator, triple smooth version of the relative strength index, RSI, for those of you familiar with various types of indicators. We find that an interesting one. Constance Brown developed it. And what we see happening on Mr. Appel's, this is a percentage version of the moving average convergence divergence, the price percent oscillator. We think it's a better version because it's a percentage. We can compare it across the board. More about that in the book and on the PPO training that we have. I'll put that at the end of this video for you. I'll also put the derivative oscillator training at the end of this video for you also. So we see the price percent oscillator still heading up as the derivative oscillators losing momentum as we have a red open box candle drawing, again showing a sideways slide. And we go to the 4-hour chart. That's where we see how things popped up back on Wednesday and then started losing some energy on Thursday. Hasn't crossed over going down yet, so we'll watch, pay close attention because we live in a crazy world, folks. We'll see how this week ends. Now, where it gets interesting is as we move into the Qs, the NASDAQ 100 down for the day, 0.04%. What do we see happening though? If it's a huge down day tomorrow, you might see that price percent oscillator not cross at the end of the day, but that's not likely. Most likely going to have a crossover going up. That would be a weekly vertical crossover. That would be a change from our down move. Now, we talk about the bull trap being set, and of course, the bull trap is where you have a market crash, and then like it did in 1929, like it did in the dot-com bubble, like it did in the housing bubble. I mean, like we see with other stock market crashes and problems, you always have things go into a bull trap afterward where the market gains back 1/3 to 3/4 of what it lost. Well, it's going up quite nicely, but the economy's okay now, right? Everybody's back at work. Corporations are going. Nobody's out of business. Right. Okay. We'll continue to watch, see what there is to see. Derivative oscillator hadn't flipped over to positive yet, but it looks like the price percent oscillator is headed that way, even though it was a bit of a down day. We go to the 2-day chart. What do we see there? It peaked back on the 17th. And of course, except for a red spinning top, The 2 days after that, representing Monday the 20th and Tuesday the 21st of April, things have been going up since then. Now again, not reaching a higher high with this first day of this latest candle, but it is above the weekly trend, the 2-day trend line rather. And we see the derivative oscillator losing momentum, but the price percent oscillator still heading up. Go to the 4-hour chart, up in the morning, losing some momentum in the afternoon. Pretty much a laminated price percent oscillator on the red signal line, derivative oscillator gaining upward momentum. We'll make our call tomorrow and see just what the cues looks like. If it's a booming day, then of course, remember the weekend effect. Those of you who've taken our training on the Monday or weekend effect, we'll pay attention. We'll see what there is to see, what there is to learn on this. More about it tomorrow. We're now going to go into bonds. What do we see there? Bonds down for the day, 1.17%. Price percent oscillator heading down. Derivative oscillator continuing to lose downward momentum. To lose upward momentum. It's still green. What do we see? We have a red spinning top, almost a doji for the week. And we go to the 2-day chart. Of course, it crossed over going down all the way back on the 13th of April. Went up for about 6 days. 8 days, 6-8 days. And then sideways and down since then. Price percent oscillator heading down, derivative oscillator gaining downward momentum. We go to the 4-hour chart, and of course, down in the morning, further down in the afternoon when bonds sank. So we'll continue to watch and see if indeed and when we have a weekly vertical crossover going down on bonds. Will allow us to go short on them or do a practice trade on a put. Now, we're going to leave bonds and go to gold. What do we see going on with gold? Well, gold has been up for the last 4 or 5 weeks, and we are seeing the first red candle in a while. It's a red open box, means it's a slowdown in the up movement. Price percent oscillator is about flat. Derivative oscillator still negative, but losing downward momentum. Looks like it's getting close to flipping over, but that red open box candle is a problem. We can see on the 2-day chart heading down. First day of this latest 2-day candle, not quite tagged. We've already moved through. That happened back on the Tuesday, Wednesday candle of this week, where we pushed through the 2-day trend line, and we're trending further. Red down candle so far the first day of this latest 2-day candle with a wick on the bottom, sitting right there with a wick right there above the weekly trend line. Derivative oscillator losing lots of momentum. Price percent oscillator getting closer to a potential crossover going down. 4-hour chart heading down also. So again, what do we keep hoping is going to happen with gold? It's going to turn around and cross over on that 4-hour chart and give us a buy. But it just ain't happening right now. So we'll continue to watch, see what there is to see and what we can learn from these things. Trying to redraw that 4-hour trend line. That's a pretty good one. So we'll continue to watch, see what there is to see. Now, folks, that's where we are on our 4 major charts. Still making up my mind on what oil ETF I'm going to follow. You guys have given me some good suggestions. I'll try to get that worked out by the time we do the show tomorrow. Of course, OIL, what we were following before, has had a call option exercised by its issuer. Why? It dropped below $5 and has just been a mess. So that's where we are on that. We'll go to Bitcoin, up again for the day. Quite nice, 5.72% after being up 7+% yesterday. Now let's not start off on that 4-hour chart, but on the weekly, look at that, getting closer and closer to a crossover going up. May end up at the end of the week being one. So those of you who want to practice trade Bitcoin, pay close attention to what happens on Friday. Why should you pay attention? Look how incredibly accurate these charts have been on Bitcoin for the last many times, except for a crazy period where you just couldn't get any good signal between end of July 2018 up through, November of 2018. And then we saw those charts working beautifully as they had previously and as they have since. So again, we'll pay attention to what's happening with Bitcoin, see where that leads us. Just to let you know where the 2-day is, of course, it crossed over going up back there around the 13th. And the last few candles, nice big, first day of this latest, a nice big green up candle, trying to push up toward that Bollinger Band, rocketing up. Derivative Oscillator 2, go to the 4-hour chart. What do we see there? We see up movement in the morning and further in the afternoon. Quite nice to see. So keep your eye for a weekly vertical crossover. At the end of the day on Friday, depending what Bitcoin does, keep your eye on things. You might have a possibility. Now, lastly, we go to real estate. Real estate down for the day after being up yesterday, down 1.16%. Where do you guys think real estate is going to go with what's happening? How many people are even paying their rent? How many businesses are? It's going to be tough. Real estate already dropped from about 100 a share down to 55. Now, this is a real estate investment trust, commercial stuff and all. We're just using it as an example for us to follow, pay attention to. Price percent oscillators heading up, still negative. Derivative oscillator losing downward momentum. A little green up candle for the week with a wick on top. The good news is no wick on the bottom. But again, a ways to go before it crosses over going up. 2-day candle crossed over back on the 9th of April. Went up for 2 more days and then sideways and is really just still in that sideways slide on the 2-day chart. Price percent oscillators heading up. Derivative oscillator losing upward momentum, still green. 4-hour chart heading down, particularly after that down morning, after 3 days of up movement. So again, we'll just wait. Real estate still trying to figure out what it's doing. We'll let the charts lead us. Folks, that's where we are as we end the day. If you don't have a copy of our book, Charting Your Way to Wealth, you need it. All you got to do is follow the link in the show notes and buy it. We'll get it right out to you. And if you're not a Patreon supporter, don't forget, with the new month coming, we're going to have our live call-in session Wednesday after next. We want you to be with us. We will get all of you on there that we can. And again, we so appreciate you being with us today. The Patreon membership starts at $30 a month, $1 a day for the valuable stuff we deliver to you. And of course, that Patreon call-in session is just some more intensive training. We appreciate you guys. Thanks for all the nice comments. We love to hear from you. CW@chartingwealth.com. If you live overseas, for some reason, Square will not clear your foreign credit card, but if you'll email us, CW@chartingwealth.com, guess what we'll do? Send you a PayPal invoice. You pay that. We'll send your book to you wherever you are in the world. No extra shipping. God bless. All the best from the whole team at Charting Wealth World Headquarters.